I would like to talk about the market for newspapers in early 2009. The market is uncertain, uncertain being code for we're really not sure what's going on right now. Certainly, less deals are closing. The deals that are closing are for small daily newspapers and solid weekly papers. Larger papers just aren't selling in the current market. Prices are modest at 5 to 8 times trailing EBITDA. This is modest compared to the last few years. Typically, these prices end up at 50% to 100% of annual publishing revenues. Buyers are typically family-owned groups or individuals. These are folks that kept their powder dry. They don't have high debt, and they've done a good job in managing their balance sheets. There is a lack of conventional financing available right now. Traditional financing sources just aren't making loans on newspaper properties, and even buyers with excellent credit are finding that their banks will change their deal, change their loan terms if they go back for fresh money in the current market. So even buyers with excellent credit are having difficulty arranging financing right now. This has created a return to seller finance newspaper sales. Seller financing was very common in the past with small newspapers, and in 2009 we are going to see a lot more seller financing, even in larger deals. Seller financing is when the owner of the newspaper actually loans the buyer the funds to make the acquisition. Typical terms for seller financing are 20 to 30% cash down payment. The balance paid over 5 to 10 years with interest of 5% to 7% per annum. Now, there's some advantages to seller financing. The seller receives interest on more of the purchase price than he would in a cash sale, and the interest rate is considerably higher than most conventional investments right now. 5 to 7% rather than 1 to 2%. Probably more important is in the current market, seller financing may be the only deal structure that will actually get a property sold. There are disadvantages, of course. There is the chance of a buyer default, in which case the seller will take the newspaper back. An unfortunate situation for most sellers who will not want to take a newspaper back again, and frankly the newspaper may not be in as good a condition as when they sold it. Also, as a disadvantage is the seller does not receive all the cash at closing, so does not have funds for other projects or other types of investments. So, summary here early 2009, deal flow is slow, but some transactions are being completed, primarily small dailies and weeklies. Prices are well below recent years at 5 to 8 times trailing EBITDA, and seller financing has returned as a sensible deal structure in some cases.